Let's get more in terms of what we're watching out for in South Korea. We have our guests here to join us to break down the numbers. We have Barclays Capital's regional economist Leong Wai Ho joining us from Singapore this morning. So what did you think of these figures? Was it a big miss in your view?
Well, it actually came in line with our estimates. We were looking at 0.7 as well. So we were happy with the trajectory. I think it's a very reasonable trajectory. I think what we saw was slightly weaker than expected net exports, but this was amply supported by what seems to be a very strong, resilient domestic economy with consumption, private consumption in particular, holding up quite well.
Okay, so Leon, what about going forward then? What about Q4 and for the next few quarters? What kind of growth are we looking at for South Korea?
Well, we're looking for a slowing in the global electronics cycle. So, that's going to impact on key electronics producers like South Korea, Taiwan and Singapore more disproportionately than others. So we were looking for a slight weakening of growth conditions to about 0.3 Q on Q, down from 0.7.
Okay, so slowing down in GDP. Do you think the strong won has had any impact as well?
On a Q3 number, I don't think so. I don't think it's particularly strong at this stage because fundamentally, if you look at the won on a basket, it's still undervalued by quite significantly relative to its trend average. So in terms of the level of the won, I think that's still at a very supportive level for trade. I think
okay, what about
in fact,
strength in the won though? Sorry, let me just continue on this line of questioning for the currency itself, Leon, because people are focusing in on the Korean currency because it has been the best performer in the Asia-Pac so far in 2010. What about strength in this currency? Do you see that continuing, considering there is talk that there might be intervention coming from the government to stem the won's rise?
I think what the government is more concerned with is the volatility in the won and also the fact that there might be one-sided expectations of appreciation. So they're more concerned about this rather than the level of the won. I think that given the trade surplus or the current account surplus of $30 billion projected for this year, I think they accept that the level of the won is actually not optimal. It could actually be stronger to ride out these imbalances. So I think that what the concern is ultimately the volatility.
Time here. Let me just quickly ask you about interest rates. Are we going to see another interest rate hike in the near future? We're still looking at 2.25% for borrowing costs.
Well, Susan, I think the jury is still out on that. I think what we're seeing now is the rolling down of high-frequency indicators. And if export momentum actually starts slowing more rapidly and we actually get core inflation readings slowing down, they're out 1st November, I think then there's a greater chance that they will actually defer the rate hike.
Okay, Leon, nice talking to you this morning. Thanks for joining us. That's Barclays Capital's regional economist, Leong Wai Ho, joining us there from Singapore.